All right. Hey guys, what's up? I have my friend Javin here with me, and he's going to actually be sharing with us and talking us through a little bit about the real estate game, how he got into it. If you're looking to purchase right now in the market, I know I've posted some things here in the group about prices dropping as far as the market, as far as homes. How's a good time to buy a home, good time to buy a car? Well, Javin's going to help kind of walk us through some of those details on how you can be prepared to purchase, as well as we've been having a lot of conversations. I've been seeing a lot of conversations about, hey, I want to get started investing in real estate. And he's going to share a little bit about his experience, about how he helps people invest in real estate. So we're going to cover a little bit of those transitions, those subjects today. I definitely appreciate him joining us. And again, through this time, it gives us a little bit more ways to gain knowledge about what's going on. So if you have any questions, feel free to pop those on. I'll be watching, and we'll make sure we get those answers. And then also we'll make sure we share his information so that you can reach out to him directly should you need some help in that real estate section. So Javin, go ahead and tell us a little bit about yourself, what you've been actually doing, how you got into real estate, and what you actually do.
Yeah, man. Well, appreciate you, Jonathan, for having me on here. Again, my name is Javin Daniels. I am a real estate advisor in Charlotte, North Carolina. I've been knowing Jonathan for maybe like 10, 12 years now when we were living in St. Louis, Missouri, which where I'm from originally. But I've been in the real estate industry for a little bit over 5 years, going into my sixth year. Started off with a small firm here in Charlotte, North Carolina, doing property management for about 12 to 13 investors. And then I started doing first-time home buyer programs and working with my millennial network of people, and really helped a lot of people, get their first home. Now those people that bought their first home, they're selling their first home and buying their second home and upgrading, and having a lot of equity in this time right now. But I grew my property management business from those 12 to 13 people, and I started managing over 100 properties within 3 years. And after that, property management was kind of a headache just for me, with having the right investors and willing to put in the money that's needed to make these properties, livable, was kind of a headache. So, I hated to work with like slumlords. So I kind of got out of the property management, but continued to work with my investors, as everything that I saw was in an investment mind frame. Anybody that I was giving the first home to, I wanted them to think like investors, just because, for our generation and our people, I know my grandmother, my grandfather, they had their homes for 35, 40 years. We can still go home and travel and still go to grandma's house. And, for us, it's not that anymore. No one wants to buy a home. No one wants to stay, not complacent, but set roots and things. And, I may leave in 3 years. And it's kind of like, you may leave, but now you have a rental property, that you could charge a little bit, get the mortgage paid for, and be able to do more things with it and have leverage. But yeah, so I started working with investors a lot more, and I got into off-market wholesaling kind of deals and finding properties direct to seller, and then giving them to my investors, and going into doing fix and flips and things of that nature. And it's really just taken off, and now we're trying to get into or not trying, but we are getting into the multifamily aspect of investing, where you can get 12 houses, but you can get those 12 units under one roof, and you don't have to drive around. So it's a little bit easier, same process of single family, but it's a little bit easier. So that's kind of my little story, my quick story.
No, I appreciate that. And you kind of touched on a little piece of things that we always talk about when you think about this money, and when you think about how you approach owning a home. Yeah, it's a big responsibility, but when you think about one of the things that's kind of the foundations of building wealth, regardless, you'll find consistently that people have real estate. And when you look at the demographics, diversity wise, a lot of wealth is built through real estate and small business and things of that nature.
90%.
Yeah.
90,
So
yeah.
it's one of those things where real estate is it's not as it doesn't grow to the rate of the stock market, but it's more consistent. It's a couple different ways you can kind of make income off of it. But then just in yourself, when you're just getting started, like you said, millennials, a lot of us, hey, we're really doing this thing at our own. Well, buying that first property, not maybe $200-300 home, $1,000 home, but starting off with that 60, 100K home, just to get yourself going, to understand how does being a homeowner work? How do you understand what that does for you? Yeah, you kind of stabilize your rental costs, or to your point, as you guys are starting to migrate into the apartment complexes and duplexes and things of that nature, what many people have figured out who are about that fire movement, or really trying to figure out how can they retire early, become more financially independent, they're getting these multi-unit properties, living in one, renting out the rest of them, and investing the difference. So they figured out a way to make the most expensive thing in your budget essentially free for them. So that's a huge piece. So I know I'm getting a little bit ahead, but I just thought that when you had mentioned that in your story, that's really eye-opening. And yeah, those people, when they were renting or starting to go through real estate, they probably weren't going out and kicking it as much. They were kind of working on the business. So you shift your priorities in that manner. But what would you say, or what would you think is kind of the best ways to get started? If you're, at 25, 30, like yourself, you're not unmarried yet. So what would you kind of tell somebody to kind of direct themselves as far as opportunity?
I mean, definitely doing this, tuning in. If you're in here and you're tuning into this, you have the willingness to learn. I think that's the biggest thing. You want to find the knowledge and people that are doing it. But just from a financial standpoint, the first thing you need to do is check your credit. Right now it's a little bit different. The Fed so you have an FHA loan, which is backed by the federal government. Then you have a conventional loans that's, backed by the banks, and you don't need federal approval. But for FHA loans, before this pandemic hit, we were at a 580 to get a purchase a home, so I mean, it was very, very low, and everyone's getting homes. Because the 580, that credit score is not good, and you talk about that all the time. But now, since this pandemic, and banks are scared now, and people are unemployed, and they have to be kind of tight on their money and how they're lending. Now it's a 640 or above to get a FHA loan. So the first thing would be to do is work on your credit. Second thing is going to be to, find out where you're going to get some money from. You could have, your 401k. People don't know, if you're buying your first home, you can get money out of your 401k if you've been saving that money, and it's not penalized. You still have to pay taxes on it, but you're not penalized from taking it out after 59 and a half, right? So that's where, when I first moved to Charlotte, I took 10K out of my 401k to move and do my relocation, because I didn't have the money, but I knew I needed to move. If we're going to be working, how they say we're going to be working up to 65, you have 40 to 30 years to pay back that money and to save it. So, and then if you have parents, you can, get money lent to you, or like it's a gift. We do this thing called the gifting fund, where you can, get money gifted to you. And then also just saving, being disciplined. I mean, I think that's the biggest key. Right now you have to have 3.5% to 5% down for the down payment. So if you're looking at $150,000 house, you need 3% of that. So what's that, 15 grand? They are increasing that as we go into this recession that I'm always, I'm saying that we are going into a recession. People are unemployed, and then it's going to take us a while to get out of this, within probably 3 to 4 years before we see it going back up to an expansion period. But really just saving money. You need 3.5% to 5% down. They are increasing it to, now they're saying that you need 6%. I mean, 6 months of reserve funds, right?
Mm-hmm.
So if your mortgage is, what, 1,200, 1,300, you need 6 times that, right? So it almost equates to that 3 to 5% or a little bit more to get that house. But right now they are being strict on your first time home buyer programs. I'm pretty sure you've seen somebody say, yeah, I didn't have to bring anything down to the table or nothing like that. That's not the case anymore just because money is tightening up. So it's really going to be on the back of your savings, your credit, your debt to income ratio, making sure that you make more than what your debt is. The number that they want us to see is a 36%, taking all of your debt and then dividing it by 12 and then timesing it. I don't know the exact thing, but I can look that up and give that to you. But your debt to income ratio, making sure it's 36% or below.
And I had a little thought, but there was a question that came in. What about syndication? What are your thoughts on that?
When you say syndications, as far as like,
Do you, so whoever, I can't see the recent question, huh? Yeah. We're gonna get a little bit more clarification on what they actually meant by syndications, and
and I
then
guess they're talking about it as an investor, yeah, I think they're talking about it just being an investor with syndicating, and you can definitely piece together the money and go in with people and different investors if it's going to be an investment home. There still are banks that if you're talking about it's an investment home. I have one in Charlotte. I just found out that they will actually put a loan on the home itself and not even check your credit and things of that nature. They run the numbers for the home and making sure it's a good rental property, and they'll give you that money. In which I've never seen that before, and so they're doing a lot of business. But I mean, you can definitely syndicate and you can invest in REITs and things of that nature. But I always like to invest in a physical asset, something I can touch, see, and feel that it's not going anywhere. REITs, the wind can blow one day and then it all can go down. So I like to have a hands-on approach with my real estate investments.
So kind of just to bring it back a little bit, I know I talk a little bit about well, actually I don't talk a little bit about it. I'm very big on the emergency fund. I'm very big on cash on hand, and I'm really big on um uh how you keep your investments. If you're going to do something outside of your investments, like I know one question is related to pulling out the 401k. So I'm not blind to the fact that what's one thing that came out new last year that I saw as far as a product when buying a home was 100% down plans. Meaning that a lender would give you 100% of the funds for the home, all things included. And a lot of people were being qualified based on the fact that they had so much money in their 401k plan. So essentially, what lenders were doing was they were treating the 401k fund as if the person had an emergency fund. And if you know me, I'm not going to say, if I'm coaching you, if you're talking to me, I'm going to always tell you, hey, leave your 401k alone. Depend on what type of scenario it is, but 99% of the time I say leave your 401k alone because it's not really worth the investment. But I do understand there is the biggest piece about pulling out your 401k is you're like, hey, what's the tax implication? And that's really the big reason. So if you pull 10, 15k out, well, you got to pay taxes on that money versus if you just save the money yourself and just had it there. And that's a big thing to kind of be aware of when entering that. But then also the fact is, like you mentioned, having that cash on hand. I mean, I went through a refinance last year, and I mean, I've coached and even watched it from the banking aspect. When they're looking at cash, especially right now, the reason why you have to provide statements and things of that nature is trying to look at how stable you actually are. You know what I mean? Because basically everybody knows if things go out like they did with this pandemic, what's the highest priority bill you're going to pay? Probably your food, but then your home is right there next to it. And if you don't have the cash to cover for that, it's going to really put a damper on you being able to do the deal of the loan. So one of the things that I know I always encourage people to do is, if you want to save the 3, 4, 5%, whatever that you're going to put down, cool. But make sure you have some money, because a house is a responsibility. Whether it's a new build or not, something's going to come up. And it's better to be prepared for that. But from a financial aspect, it makes a better picture when you put cash, plus you have a solid credit score when you're going in, because it makes it a lot easier for you to actually do the deal.
Yeah, no, definitely. I mean, and this is the first, and we're talking about, investors or first-time home buyers, that this is the first house. You definitely have to have your ducks in order. It does get easier once you obtain that first one, where you can use your first home as leverage, right?
Yeah.
I have 60,000 equity in it.
Right.
And now you can purchase something else, and it goes on and it goes on. But that first one, you do have to tighten up. You have to make sure that you are capable of, purchasing a home and keeping it. In these times now, going to really make sure that you're stable.
Yeah. Yeah.
Mm-hmm.
I know JP Morgan, they're the number one mortgage lender of the U.S., and they just tighten up their ropes of what's going to be the
20% down.
Yeah. And that's a lot of money.
That's a lot of money. And with JP Morgan, once JP Morgan does it, every other bank then follows. That's kind of been if you look at the history of the banking situation. So it's going to be, the 20% down. And you're going to have a nice credit score. For conventional, we didn't talk about that, but you need a 700 or better for a conventional, loan. And it's definitely obtainable, but you got to, put in the work.
Now, you mentioned a few terms in there. I know I'm familiar, but just for the audience purposes, what's truly the difference in underwriting an FHA loan and a conventional loan? Like, does one have PMI and one doesn't?
The private mortgage insurance. So the FHA will always have that for the most part, unless you're bringing, a whole bunch down to the table, and, you can kind of get it away from PMI then. Some conventional loans do have PMI, but it's at a shorter time. And that's just because PMI is the reason they have the private mortgage insurance is really is on how stable you are. I think that's kind of just the term of it. If you have a conventional and you have a 750, you're probably not paying PMI insurance, right? It's just for the banks to protect themselves from that. But the FHA is, like we say, it's backed by the government. They're coming out there, they're going to pay them. It goes to the bank. I mean, it goes back to the government if you ever should default on your loan and things of that nature. The conventional is going to the bank.
So I know somebody else had a question about using the equity in your home to purchase a new one. I know you just kind of alluded to that. What do you think are some of the considerations one would need to think about before entering in that process? I know I have mine, but I'd be interested to get your thoughts as somebody who's seen it.
Yeah, I mean, I think it's just because you're pulling the equity out, you're going to still pay for that money. At the end of the day, your mortgage of the first home is going to it's going to be affected by that, right? It's going to go up by some sort, but it's going to be a lot cheaper than an actual another loan or something like that. It's not money that you're going to have to put out of your pocket per se. I always say that if that's kind of the route you want to go, you can pull that out, get 9 times out of 10, you want to buy something for that amount. You don't, if you have to put a little bit more money with it, you can, but you want to buy, if it's 60,000, try to find your house for 60,000, or 50,000, put 10 in and then rent it out. And, your interest rate shouldn't be any more than like 2% for the home equity. And you can quote me on that if that's not the case, but it shouldn't be any more than like 2% for what you pull out. So it's just a cheaper way for not paying that much interest and principal. Yeah, but I always say do it. I mean, if you can do it, I say do it. It's just sitting there. There's a lot of people in 2008 had a lot of equity, and then you see how the market crashed and did what it did, and all that equity was lost. If you're treating it like an investment, that's a second house for you. So.
Yeah, and for me, I more look at it from a risk perspective. So, what I mean? If you're obviously you're putting your home on the line. So you're putting all of your home on the line. So it's not, that equity is no longer an asset for you. And I know when I look at it is, number one, I don't like this term, but I know a lot of people kind of identify with how stable is your income to support these. because if you're renting something out, it's a business, right? So you have to understand, hey, I might not have a renter for some time. It may not be glitter and gold where I'm going year after year after year. I might have some gaps in there. Not to mention, what if this type of situation happened, you know what I mean, and you got your home tied up and your renter is there, but he can't pay. Well, can you support it? So really understanding, no matter how you pull the money or if you went and borrowed without pulling your equity, the fact is you need to have a contingency, some sort of contingency plan for the what if scenario. You got to have some sort of cash on hand to be able to operate yourself through it.
For sure, it just goes back to what we're dealing with now. Everyone's going bankrupt, and people are filing for the PPPs and stuff just because cash reserves. They're running and bleeding through your cash reserves. 6 months of cash reserves. I had one investor. She put $500 a month every month, from the rent that she was getting. And when that tenant moved out after like 2 or 3 years or whatever, she's like, "Hey, here's the 6,500, go and fix everything that we need to fix up," and she had it, so you have to make sure that you're keeping it. I mean, when you purchase a house, the for an investment, it's the 1% rule that we go by. So if you're buying for 150,000, you need to charge 1% of that, so 1,500. And that's kind of how you'll be able to save. You should be able to cover your expenses, have a little bit of money set aside. The thing is, what we say, it's not a long term. I mean, it's not a short term play to get rich. This is a long term play. You may make off your first 2 houses, you may make $4,000 a year, off of it. You may only clear $200 to $300 a month from it, but at the end of the day, that equity, that leverage, as the market continues to climb up, you're going to have a lot more value in those homes. You buy your first home, live in it, rent that out, get another one, and it adds up over time.
Cool. Then, so kind of going back a little bit to that purchasing conversation. So I'm in this scenario. I was planning to buy. My lease is up or whatever, what have you. What are things that, from a new person trying to purchase a new home, there's a first go at it, but they still want to purchase a home. What do you think should be their focus as they try to prepare, and how do they even find a realtor to kind of help them throughout the process?
Yeah, I mean, it's all type of ways. Here in Charlotte, you can just do the hashtag realtor, Charlotte realtor, and you'll see a lot of it. But a lot of real estate is kind of word of mouth. 80% or to 90% comes from a realtor. Someone that knows a realtor, right? And you want to be referred to the best. I think the biggest thing is a lot of people do the mistake of looking at homes right away. They don't know how much they can afford. They don't know. They just look at homes, and we get this level of excitement of, oh, I want this, and then our dreams deflate when they say you were looking at $350,000 houses, and they say, oh, you're only approved for 150. Then you go down and you see like, oh, this is not what I wanted. Then people get discouraged. But I think the biggest thing is to word of mouth. I'm here to help people like me that, even though I'm in Charlotte, North Carolina, I can make moves and deals everywhere. I know an extensive amount of realtors, and I get a referral fee for it. So if you say, hey, I'm in St. Louis, I want to buy a house, I know 5 or 6 realtors in the area that can help you out. And these are people that I trust, so it's kind of like doing that, asking friends and family and things of that nature. But, definitely looking on Zillow, you can find realtors on there as well. You won't probably have that personal relationship with them, but if you look at a property and you see it says contact this agent, and that's kind of how you can start. And then just, Googling what, I post things, 10 steps to buying a home. What's the first 10 steps? Or what do you do once you go under contract? What do you do post closing? Like, I give this knowledge to people. It's on my page, on my website, and things of that nature. You can follow me on IG to get daily, encouragement and stuff like that from me. So.
And then what should somebody really expect out of their realtor to do? What is really a realtor supposed to do? Because I think there's a fine line.
No, I mean, A realtor is supposed to teach you. My goal is to teach my clients so at the end of the process they can think that they can buy their next home by themselves. That's what we're here to educate you guys. I want to tell you the ins and outs. I'm going to give you, when we sit down, it's going to take about an hour and 30 because I'm going to go so in depth with you, like this is too much, and I build that portfolio to like, oh, I trust anything he says because he gave me so much gain up front, so it makes the process at the end easier. If you're still asking questions at the end and you're not knowing what you're supposed to do at closing before you get to closing, we didn't give you the information that you needed up front, so it's just for us to provide you expectations and to not have you blindsided, knowing that once you get under a contract and you have to do inspections and an appraisal, pay for your appraisal to see how much the home is really worth if you're getting a loan, and pest inspection, and you want to check the sewer and HVAC and get that service, you're looking about $2,500 after you go under contract, for a house. And so you want to break those things down and letting you know that once you go under contract and we do an inspection, the home inspector, that's their job to find any and everything, that's what they're paid to do. But for me to say, don't worry, he's going to find a lot of stuff. And normally when I go through a home inspection with my clients, I've been doing it so long, I can point out everything and explain it a little bit, more if the home inspector doesn't. So I kind of go on a tangent with it because I just have so much gain with it. But the number one thing is for education and knowledge, and they're supposed to, walk you along the process and have at least 10 steps to how it's supposed to look when you first talk to them.
Yeah, it's really saddening. As many people as I've spoken with to help them with their finances, when you understand how they got themselves into a home, it's like a bigger car. How many people have sat down, got a car, and be like, "Man, I didn't realize I paid X for this. I didn't realize I got charged this fee. I didn't know this interest rate." Well, it's even worse with a home because obviously with that closing, it's 30, 35 pages worth of numbers and things of that nature. So it's really important that this is it is the biggest money decision most people will probably make in their life. So
it's the biggest purchase.
So if you don't know the fee, what every fee means, why you're paying it, everything ain't just a part of the process. So
title insurance, and then they have title insurance on the other title insurance. And I mean, it definitely is a lot of fees that you can't get around, but at least I'm going to tell you up front, like, this is what it's going to be, like you can't get around it. But the biggest thing that I always tell people is never purchase anything outside of your budget. Just because they say you are approved for a $250,000 house, that doesn't mean you have to get that $250,000 house.
Right.
If you're rent and you've been comfortable for 4 years paying a $1,200 rent, you need to get you a house that is $1,200. You know what I'm saying? And leave it at that. Don't upgrade and get the $1,700 because you can still afford it technically. Never be house poor.
Right.
Live how right now I'm living how I want to live. I'm maintaining, I'm keeping my bills low as possible. And that's kind of how I try to move.
Yeah, it's definitely working with that 25% threshold. The math doesn't really lie on that aspect. And I think one of the things that people kind of get kind of sideswipe is when you're sitting down getting a mortgage loan, like you said, you'll get the $1,200. They'll be, oh yeah, this is your principal interest. But then when you add in escrow, when you add in taxes, when you add in insurance, that adds another $400 or $500 to this mortgage payment. And you're like, well, what happened? I'm like, well, you have to look at the total of what you're paying. Just like when you're looking to buy a car or trying to negotiate something, you have to look at, hey, how much am I going to pay? And then you also have to factor in the fact that each year, if the real estate is doing what it's supposed to be doing, it should be growing. So that taxes is going to grow based on the value of the home. So a lot of people think, oh man, I've been paying $1,200. Yeah, your note ain't gonna change, but when you add in the taxes, the escrow, the insurance, that should change because you want it honestly to change for the fact that the house is growing in value. But you need
value, correct,
from a math standpoint. And if you run your budget so tight to where you only really had that $1,200, well, you jammed up as soon as the first or even that first year of you being in there. It kind of messes you up.
Yeah.
Good
Yeah,
stuff.
no, so I always say when you're talking to a lender, you want to say I want to be all in $1,200. You don't
Right.
say what can I get
Right.
approved for. No, say hey, I want to be all in. This is how much I want to pay 1,200. Then they'll do the numbers, tell you
Right.
what that house is going to look like.
Yeah.
So yeah, I mean that's definitely good.
And then I know another question that came through was I you can explain this, but how have you pivoted your business plan to deal with the pandemic? And if you have tenants, how are you dealing with them that can't pay rent?
Yeah, so I mean, pretty much for me, I've just been, I've been saying this. I have some people that can vouch for me. I've been saying that, we're about to go into a recession. It's just a matter of time. I've been saying this for
Right.
3 or 4 years. So I've been gradually saying that, hey, I'm working with investors. When a recession hits, since I work with investors already, they have cash, so they're going to be able to buy, right? So work with first-time home buyers because they're going to be a little timid and things of that nature. But my investors are paying. My investors are spending money. Dealing with the leases, my tenants, they were still paying their rent. They had the opportunity not to, but it just depends on what level and class that you're, investing in. I mean, if you're doing C class and you're in a bad neighborhood where the rents are between 500 to 700, they may not pay their rent. If you do Section 8, of course you're going to get the portion, the majority of it, and you may just have to chuck that $48 up. But I mean, I've just put myself in a position to be a thought leader in this, and I actually have a newsletter that's coming out just what this pandemic means to real estate, and it's pretty interesting, to let you guys know, like people think it's going to be a V shape where it's going to go down and go straight back up. That's not going to be the case. It's going to be a U shape. In April, we had 22 million people unemployed. There has not been any recession.com bubble burst, anything that we've had over 3 million people unemployed. So we're 10 times what we've had. So for me, it's just to continue to push out quality content on how we can prepare ourselves, because the reason why people have fear is because we don't know we don't know the unknown, right? So if you prepare yourself for it and know that things are going to happen how they're going to happen, you just need to maintain. You will be a lot better off.
Yeah, and I like how you said, hey, I mean, your business, you work with purchases, but you work with investors, and those are two very different different sides of the business. But it's important to understand that, okay, yeah, this might not be a good time for somebody like you said who's trying to purchase, but an investor, like I said when it came before, my heart goes out to a lot of people who aren't prepared, but as somebody who's an investor, it's a great opportunity for all the things that I prepared myself for from a financial aspect.
Yeah, no, and I always tell my clients to think like investors. If you want to buy your first home and you're still thinking like an investor, you're going to get excited about this time too, and that's what we should. I mean, people will lose homes, and that's going to be, that's a sad thing for anything, but we all know that in America, you get rich during crisis and
Right.
when there's, pandemonium. So, yeah.
So another question was, when purchasing a new build or building a house from the ground up, is the loan application process the same as buying an existing home?
So I mean, it's two different ways. So you can do it. You can purchase the lot yourself and then find a general contractor to come in and do all of that. Yes, that loan's going to be different. You're going to have pre-construction costs and things of that nature. You're going to have to get qualified and put maybe a larger down payment. I think I don't know the exact amount that you have to put, but you have to put a larger down payment than 3 to 5%, right? Just because there's so many uncertainties with that. But if you're doing a new construction at a site where there's 300 homes, it's the same. It's the same as buying a single family home. You just go and say, this is what we want. They'll pre-approve you, and you don't have to put anything but maybe like a $6,000, $4,000 deposit down, and then they'll build the home, and then you pay the rest at the end, right? With the loan the lender pays it at the end. So there's two different scenarios of how you would build new construction with that.
Cool.
Yeah.
And I know one of the things I've seen was more the construction loan to help start you through the process, and then they usually tack on the regular mortgage loan at the end.
Yeah. So yeah, you can do that. I mean, I have some people, right now I'm about to build developer. I have a sit down Monday. So developers building 14 affordable homes here in Charlotte in that 230 to 250 price range. And I'm going to be the realtor to, list those homes and get those homes sold. And we're going to do, they're going to need some pre-construction loans from people just because there's nothing on it's going to be dirt, and we're going to show the renderings and stuff like that, what's going to be there, and then they'll get approved for it then. So, but it's really pretty much the same process though.
Cool. Absolutely. So going back or kind of transition a little bit to the investor side of things. So how have you seen, or what type of investment with real estate, what does that process really look like for you? Because again, I know you can invest with tax liens, you can invest with, there are so many different ways you can invest with real estate. So what has been your investment process?
My thing has been going direct to seller. And it takes a lot, it's driving around, knowing your areas and seeing that that house is boarded up, Let me write down the address. Let me go to fastpeoplesearch.com, put in the address, or Spokeo, Spokeo. You can pay 99 cents to look up an address and see who owns it and try to get, the contact information. But you can do tax liens, which I don't really like to do, just because if you're not buying it outright, you're just paying the taxes up. It's going to you, and then the owner has within 1 to 2 years to pay the taxes and take it back. Right. So this time it's kind of limbo. If you just can't sit on it, you need to make money.
Right.
You're putting more money into it, and you may not have it in 2 years if the guy wants to, take it back. So I really like direct to seller, calling sellers. Hey, this is Javin Daniels. I'm a licensed real estate agent in Charlotte, North Carolina. I have an investor who was thinking, and I'm normally sometimes an investor. I have an investor that, liked the neighborhood, saw your house, and wanted to know if you were willing to sell. Looks like you don't live there. What do you want to do? They're either going to say yes or no, and entertain it or not. You just keep going. But direct to seller, I would say, is the best approach. And believe me, you're not going to be the first person that has called them to ask to buy their house, but it's just being persistent with it.
So the process, the direct to seller, is a lot like basically if I was going to buy a home for myself, except following that same steps of process. Except I'm buying it. Hey, my whole goal in this is to put a renter in it. But as far as the technical aspect of what I'm doing is I might get a loan, or I might be paying those same process steps is going to be as if I was buying a home where I was going to live in.
Yep, it does. It's the same process, the same steps. Now, I've done where I've put the house under contract in my name, and I got it and talked them down to a lower price. This is called wholesaling, which has been, around for years, but it's really taken off. And with wholesaling is I go to a seller and say, hey, I want to purchase your house. We negotiate for it, and I want to buy it for $75,000. I know the home is really worth $125,000. Now, me, with my network and extensive network of investors, I go and pitch the house. I have it under contract for $75,000. I go and pitch it to them for $85,000. Still a good deal because it's worth $125,000. It's still a good deal. I don't put any money out of pocket or anything. And they say, yeah, I'll buy that. And so it's called an assignment. So I write my company is Our Corporation LLC, and then /assigns to. So at the end, once we took it to the attorney, I just assign it to them. I get my $10,000 finder's fee just for finding it, and they take on the property. And then possibly I'm either going to rent it out. Well, they're going to rent it out. I may do property management for them, or they're going to, fix it up and flip it. And I'm normally the listing agent, right? So, but they have to be comfortable with my finder's fee. But but that's kind of how I've been doing it too. And it gives me the opportunity to build my portfolio up as well.
Okay. So, what are your thoughts on foreclosure? So, with something of this nature happening, it could potentially open the opportunity for a lot of foreclosure.
Yeah, and we will have defaults. I say within 4 to 8 months or 4 to 6 months, we should have defaults starting to kick in. People will try to go back to work, and then people aren't going to go back that fast, and it's only so long that the banks are going to be able to cooperate, and then that's when those foreclosures are going to happen. And I say you can get it beforehand, and unfortunately, you are still going to pay a little bit of a higher price if you're buying it pre-foreclosure. So if I'm going direct to sell, somebody says it, hey, I'm about to lose my house, we're under foreclosure, but I'm trying to sell it real quick. Just depends on where they're at. They may still want to get top dollar and save, but make a little bit of money, or they're like, hey, I just want to pay this thing off so it doesn't, hit my credit and stuff like that. You can still find a deal. A lot of my investors, they actually wait until it goes under foreclosure. The banks have it, and then, as you know, in 2008, the banks just opened up and just put all of them in the market at one time.
Right.
There's a few ways of entry points that you can do for those, but you can find pre-foreclosures, but you'll take that approach as direct to seller to see who has it. They have lists out there, but you just got to know where to get those lists from.
And what are things that in all these cases, because it's going to be a house, right? So what are things that someone who's looking to invest direct to seller, what are things that they should be concerned about or weary of as they start to try to go down that process?
You just really want to know what you're doing. You want to make sure that if you don't know any type of lingo and stuff like that, once you say, if you get the house under contract, your inspections, you need a home inspector, you need a pest inspector, you need a plumber to come out there to look at and see if the plumbing and the sewer lines are clear. You need an electrician to make sure there's no faulty wires or anything like that. Making sure your air conditioning unit, your HVAC are operating properly, and your service every May. These are things that you just want to be clear on, making sure it's not in a flood zone where you have to, once you're at closing, and you have to pay an additional $1,500 for flood insurance because it floods every winter. These are things that you want to know about, and just property insurance and making sure that you can get it insured and things of that nature. So those are things that you want to make sure you do in the due diligence once you go under contract. But the first thing is just finding the deal, having the money, and then all of that else, it will take care of itself. Mm-hmm. And then always know that your contractors, you're probably going to go through 3 or 4 contractors before you find one good one. And he may last for a year or two, and then he may go haywire. You always have to find a contractor. It's trial and error.
Yeah, so it's a lot of risk and effort that's taken to run it. What do you see as the benefits of hiring and the language just kind of escapes me, a management company? I'm sorry, a management company for that. How do you kind of weigh the cost benefit of that versus what you may be charging, that type of thing?
Management companies charge you 8 to 10%, right? And then some management companies, they may tack on a fee for if they have, they may tack on fees for anything that goes wrong with the property. They may put an extra $20, $30 on it. So you have to really look at their numbers if they charge you an extra fee for house calls and stuff like that. You can go with the big company, or you can go with a medium company or a small company. I used to work for a small company. We started with 12, 13 properties, and it took it to 100 properties. And we didn't charge, a middle fee or anything like that. We took our 8%, and that was that. And we were making sure that our companies, our investors were well taken care of and really being transparent with them. But it just really depends. But I just say, look at the underlying fees of what they charge, because it can add up really quick if they're tacking on a lot of fees.
So we definitely talked a lot about the purchasing, talked a lot about the investment process, and even the direct to sell. None of this really kind of makes go if you don't have a renter. So how do you kind of find a viable person? And then what are some things that you probably need to be cognizant of to make sure you're protecting yourself throughout this process? Because when you become a landlord, obviously you're subject to a lot of responsibilities by the law standard.
Yeah, by the law, I mean, it's a lot. I once say you got to figure out what your income is going to be, what you're going to charge. And I have to be transparent. I've rented houses from 500 to 900, and I'm getting calls on the weekly from tenants, right? And then I have homes for 1,300 and above, and I don't get calls from the tenants. They're taking care of the house. So you have to figure out what kind of headache do you want. If you want that low income headache, you're gonna be hands on the ground all the time. If you want that high income, a nice house, you're gonna have less things to worry about. But not taking cash, that's the one thing. If you want to manage it yourself, do not take cash. Find a actual find a realtor. Say, hey, can I get the lease agreement, right? A standard professional lease agreement. Find a realtor, pay them $50 to get that lease agreement, and you can use that from here on out. Making sure that you have renter's insurance. Making sure that everything is documented and you have emails between your tenants and things of that nature. To making sure that knowing the law that even though you evict them, they may not move out of their house to 2 or 3 months. Just the process of eviction it's kind of extenuous. So, making sure that you give them a 60-day notice that you're not going to be, renewing the lease and things of that nature, and making sure that you keep a security deposit and you don't spend that security deposit. If they have, and we can talk, more offline, but if credit checks, you want to do that. If they have bad payment history, you need to be aware of all of those things. But you can find a lot of people on Craigslist. You can find a lot of people on just your social media. Facebook Marketplace is a good place to say, hey, I have a rental. Those are kind of the things. Yeah.
Phenomenal. So, Javin, I know you mentioned earlier a little bit of your info. How can my people and Money Talks and YouTube, however, really kind of connect with you?
Yeah, no, I'll put in the chat, it's info@javindaniels.com. My name's spelled out, info@javindaniels.com. You can send me an email. My real estate page is called, it's at Real Estate with Javin. So you can come and chat with me on there. My personal phone number, it's all on my social media and stuff like that. It's 704-804-3033. And those are the 3 ways. My website is javindaniels.com. And you can kind of set up for a free consultation, and it'll book an appointment with me. So those are really, the ways to get to me. So I'm on LinkedIn at Javin Daniels. Just Google Javin Daniels and you got me.
Hopefully they get you. Well,
yeah.
But
it's maybe 4 of us in the world.
Oh, okay. So it'll at least be on the first page.
Yeah, I'll be on the first page for sure.
Okay.
Yeah.
I get you. Definitely good stuff. Appreciate the conversation. You guys, this link to all this information, and definitely I'll try to get that typed up and put in the Money Talks group. If you're on YouTube, I'll put that in the description below. But definitely appreciate you hopping on, Javin. If you have any question, any follow-up, feel free to reach out to him. Awesome guy, very comedy, so you won't feel bad. You'll have fun going through the purchase process with them. But definitely appreciate you having on. Very, very good time, great info.
Man, thank you for having me. And it's a lot, and I got a lot more information from that, to come. So just, hit me up if you guys need me.
All right. Thank you. See you guys.
I appreciate you, bro.